Hello, welcome to the September edition of the Wealth Advisory's Top 10. I am Briton Ryle. This is Jason Williams. We have a couple of, before we get started, we have a couple of personal announcements. Number one, my man here is getting entangled. He is now engaged to his longtime girlfriend, Ellie.
Thank you, Britt. Appreciate that. You were a big cheerleader of
yeah,
that.
oh, absolutely.
So I knew you'd be happy to hear it.
I threatened to fire you if you didn't. If you didn't make her an honest woman. I was like, you're out of here. But no, congratulations. It's really awesome.
Thank you.
Really happy for you guys. It's very, very cool. And the second item is that you guys probably don't know, my daughter goes to Tulane University in New Orleans. She bugged out on Friday with her boyfriend to Destrehan, I think it is, Louisiana. Okay. And they actually, water came up to the house. Whoa. And actually came in a little bit.
I have no idea where Destrehan is
in
New Orleans, but I mean, it was a pretty big storm, so I'm glad she's safe. I'm glad they bugged out.
Yeah, apparently it's never flooded. But yeah, I was telling, both of her uncles asked me about it on Saturday, and I was like, it's a great comfort to have children that are like smarter than I am. Because they're going to, probably make a good decision, which she did.
It's always good.
Yeah, and they left before traffic got really bad too. She had a friend that went to Houston, 13 hours driving to Houston, which normally is 6, so it's like twice as long. And you think that I think that DC to Richmond stretch is bad. It'll be awful. So anyway, the Wealth Advisory's Top 10. This is where Jason and I get together and we take the 10 stocks from the Wealth Advisory's model portfolio that we think are going to perform the best over the next 30 days or 31 as August had. And we do a little fantasy draft. He picks 5, I pick 5, and we compete, see who does better. There's no real reward or punishment for it. But in any event, there's the flag of, I'm from Richmond, Virginia, and the flag has, the motto is Sic Semper Tyrannis, and it has a Spartan woman with a spear standing on a fallen foe, 1 foot on it, very triumphant. I sent that to Jason as a model for him because he destroyed me in August. Absolutely destroyed me. A phenomenal month. Had Dick's, an earnings blowout, a special dividend, is that right?
And a special dividend.
Special dividend.
And they boosted their dividends. They boosted their regular dividend. They're paying a special dividend. They blew out earnings.
It's amazing.
And they were up over 35% last month.
And it's like every aspect of the investment thesis when we recommended it was Jason's pick to go into the portfolio to begin with. Is coming to fruition.
It really has,
and it's amazing.
I just want to throw this out there because I was a little curious this morning, so I decided to do some year-to-date research. Dick's is up 150% year-to-date.
Jesus.
We talked about selling this in December. I'm so glad we didn't.
I hope you guys
are glad we didn't too. Yeah. Because we talked about selling it in December.
Right. Because it hadn't come around really.
A bunch, it had given us some gains, but also everybody was betting on the reopening, and I just
and you would think that it would have been one of the first, to go, given stocks like Peloton, which was clearly a COVID play because people, were finding activities to do without, being around a bunch of people.
But yeah, Dick's is actually our best performing stock so far this year.
Wow, that's amazing.
Wouldn't think that from a sporting goods store, but it has just been tearing up the charts, and it's been a great one.
That's sort of the benefit of the way we approach investing. It doesn't have to do with momentum and that kind of thing. You want solid companies, good products, and good management, and you get that combination, and the odds will ever be in your favor.
Definitely true. And that wasn't the only great one I had there too. I mean, I knew that Dick's was going to do well in. Britt doesn't want to hear this because I'm just really excited about the portfolio. It looks really good this month. Albemarle did almost 30%. Innovative Industrial did about 15%. Chewy was only up about 4%. They report earnings later this week, so I think that Chewy's going to have maybe not quite Dick's earnings performance, but I think it's going to have a really good one. Maxar was my only loser, down 7%. It got hit really hard when they delayed that satellite launch. Right. But the thing is that in the past 5 days, it's come up about another 10% off the lows there. Well, so it really got oversold, and I hope you guys took the opportunity to buy some shares while it was.
We were first buying it, and we were like, this stock is a $25 stock. We got it at 9 or 10, something like that.
Yeah, it was down there.
And we pounded the table about it being a $25 stock. And now, if you got a chance, if you see it at 30, you buy it because it's gonna move.
I think it's a $60 stock.
Or it got down to 27.
And they used to pay a much bigger dividend. That can come back. It can definitely come back up there. And then Dick's 35.5%. Brit also had a couple of good performers there. Unity Group was up about 15%.
Yeah.
That's awesome.
That's nice. We like it.
You know, Hannon Armstrong got you about 7%. Qualcomm 3%. It was Lemonade that really hurt you there.
Really let me down. I was not sitting in the shade.
And it is a shame because Lemonade it actually over the past week has perked back up. Sure. You know, and so that's one of those ones that it's going to do that. It's been volatile.
Sure,
it's going to continue to be volatile.
And that's a great one to buy on weakness. It's nice to have your timing, write down so that you're buying it, at a low. But it's not going to. It doesn't seem to me like the stock's going to base much when it does sell off. Like it's, you might get a couple days of it being at a low, and it's going to.
It bounces.
It's going to pop. Yeah,
it really does. Yeah. It really does. People see the potential in this stock, and you've got people that are sort of trading in and out of it. You've got a lot of retail investors in it, so we've got a little bit of volatility there. But I still think it's a great stock. And then you had Spotify too. Spotify was looking really good. Reported great earnings, but I guess it was they're projecting user growth to slow a little bit, and it dropped. And I think it's silly because, really what they were projecting and their guidance is still very positive. It's still big growth. It's still double digits.
And they're leading in that space.
Oh my
and
gosh,
so you'd have to be kind of like bearish on the streaming music space to be bearish on, or even like not bullish on Spotify. And it's a case of, I think the analysts just kind of like, they never are going to go out on a limb. You're not going to get, any analyst from a big investment bank really putting down ridiculously positive projections for stocks, especially one that they probably still want to own. And they were criticized because they were going to. They're talking about buying back stock. Spotify put $1 billion in their stock buyback fund, and analysts were like, "Oh, well, they can't invest in the business." And, when your business is killing it and churning out cash at that rate, why not buy back some stock? Right.
And you already made a huge investment.
And they've already made huge investments. They want more investments.
No, definitely true.
That's kind of weird.
We had an expression back when I worked at Morgan Stanley. It was called safety and mediocrity.
Yeah, right.
You've heard safety in numbers. Well, safety and mediocrity. You're never going to see a Wall Street analyst go out on a limb, because if they go out on a limb and they're wrong, they lose their job.
Right.
If everybody else is wrong and they are too, well, they get to keep their job.
Exactly.
And if you go out on a limb and you're right, it really doesn't get you that much of a bigger bonus. Yeah. So safety and mediocrity. Yeah. You look at what everybody else is predicting, and
you maybe go like incrementally more or less,
a little bit different.
Right. So you really stand out. Another one, we've got an IPO coming up. Electric pickup truck maker Rivian.
Oh yeah, Rivian is going to go through a SPAC.
Billion. I think they're going straight IPO.
Oh, okay.
80 billion valuation is what they're looking at. 80 billion. And apparently, this is kind of funny. Elon Musk tweeted at him, "You should probably try to make one production truck for every $1 billion you have in market cap." And you're like, really, Elon? But the fact is, I think Tesla didn't break 10 billion until just a couple of years ago. I think it was 10 billion, and they had already produced 325,000 cars, which is kind of amazing when you look back at it. But so that valuation on Rivian, 80 billion, seems like a lot. They have raised something over 10 billion in the private market.
Well, and seeing some of the
loaded with cash.
Seeing some of the stuff that's come out, especially in the EV space recently, you've got a lot of companies that they came public, and if they're going public through a traditional IPO, then they've definitely that somebody's done their research on this and done a lot of. This hopefully isn't going to be like another Nikola or Workhorse where after it goes public through a SPAC, you find out that they were lying about most of their stuff.
Yeah.
But still, that's a huge valuation.
Oh my God, yes. But my point in bringing it up was Albemarle. Like, why do you think Albemarle is doing so well? And it's because it's being recognized, right? The valuations for everything electrical. We saw it back in December. Electrical vehicle stocks went crazy. Yep. And this was our thesis, when we originally recommended it, 3 years ago or something. Once again, our premature allocation.
We definitely got in a little bit
strikes
early.
again.
We really lost on that one for a little while.
Oh yeah, and had angry subscribers writing in saying, "What are you doing? China's slowing down their electric car." We're like, not really, actually. Just buy it here, and it was down to 80 or something in the 80s.
Yeah, it was under 100.
Yeah,
it was well under 100.
And so it's like, the long play sometimes. You got to be able to look ahead and see where the markets go. Yeah. And they almost always, emerging technologies or products or whatever, they almost always take longer than you think. So it's like the initial enthusiasm will almost always wear off, and then you'll have a second opportunity to get in. And that's where the original investors lose money, get disheartened, bail, say it's all not going to happen or whatever. But then you miss the next coming around, and that's why we wanted Albemarle's, because it's one that we can project. Who knows what electrical vehicle company is going to really hit and
that's the great thing about Albemarle is it doesn't matter because they're going to provide the lithium for everybody.
Right. Right.
Yeah,
and,
love that.
So
that was what we liked about innovative
well
industrial properties. When we first recommended it, didn't matter which pot company sold the most pot.
Right.
IIPR was going to own the property.
Right.
And was going to pay out the dividends.
Right. It's a great way to go.
It really is. It really is. So what do you say? We've done a little recap. Done a little market analysis. We want to get into our picks. Since I was the. So I just want to throw this out there. Britt did beat the Dow Jones Industrial Average. He came
My
in
mom's
shy
gonna
of
be
the
so
S&P
proud of me.
and the Nasdaq, but he did beat the Dow.
Really,
you had a 1.7% average gain. The Dow was at 1.1, Nasdaq at 3.2, S&P at 2.5. I don't know if you want to hear my average gain, but I'm sure you guys do. It was 14.9%.
That's amazing.
Not even a competition here. I kind of wish that I had saved that one for a month when you had a bigger gains, so that you could have had these blockbuster gains and a 13% average. Okay. I still won.
Whatever. Well, of course. So you just wish we had won another month, is what you're saying. Okay. Well, that makes sense. That's reasonable.
Well, I've got my chance this month.
That is. I mean, to be able to do 5 stocks and average 14%, in a 30-day span is.
I'm amazed, and I just want to. This is, I feel like, where I have to say that past performance is not indicative of future results. I can't guarantee that I'm going to do this again, but I'm sure going to try. Every month I'm going to try.
Well, and we all know ultimately that it's going to be, the underlying strength of the market that's going to help help what happens. And the irony of that is that I kind of tried to go defensive because I thought, and I still think that there's going to be some volatility crop up. I still think there's downside coming. So I went with I added some sort of safety plays, Hazzy, Hannon Armstrong, and Unity, and those were actually my best performers.
They were,
even though the market continued to rally. So. So there you go. So
in the way that we've set up the rules, the person who did not win the previous month gets to pick first. So
we have to get rid of our stock.
That's right. We're going to do keepers. Each of us gets the option to keep 3.
But I do keepers first, right?
And has to get rid of at least 2.
Right.
So Britt, you'll go ahead and do the keepers.
I'm keeping all of mine. I don't care what the rules say. I'm changing them. I'm changing them right now. Yeah.
I'll be honest with you. I mean, I came in this morning and I said, I kind of don't want to get rid of any of the stocks in mine.
Yeah.
But got to stick with the rules. Got to freshen them up a little bit there. And I think there are some others out there that have some potential.
We're in a really interesting spot, right? September is a couple days away. Typically the worst month for stocks. People tend to say it's October, but the stats say it's September, and it's not horrible. But the stretch of September to October is almost always a little weak, right? And we have, we're just coming off a little bit of relief because for some reason people had the idea that the Fed was going to start hiking interest rates at the same time they tapered, which has never been on the table. I
don't think that ever was.
And honestly, I think that people are just making it up to first of all justify some downside and then to justify more buying. But the last today we're definitely seeing some relief upside, and we were last week, honestly, because I think the word was out that the Fed wasn't going to say anything about hiking. They were going to say that's still way out there. They got to see the labor markets improve, but the taper is coming. Definitely. Now Powell's getting all praised for managing all these expectations really well, which I guess he's done.
I guess he's done all right. I mean, I got to say, going into the conference, when I found out that they weren't going to have it in person, that sort of I felt like that was telegraphing something from them. They're obviously still afraid of COVID, right. So they still think that there's some potential side effects coming.
And they probably don't have a bombshell to drop. If they were going to say anything really serious, they'd probably all show up. You kind of want to do that on purpose. You don't break up with somebody, in a text. You're
not supposed to.
You man up and go face to face, right?
You do it in a restaurant so they can't go crazy.
Can't punch you in the face. It's true. It's very true. So yeah, what are we going to rally to year end? No, I have to sort of stick with. We got some volatility coming.
Yeah.
Even though
some sort of correction or sideways movement or something.
I've been watching the breadth of the market a lot lately. What sectors are up, the number of stocks trading above their 50-day moving averages, stuff like that, to see where the concentrations of money go. You know, we all know that money is super concentrated in like your really big tech stocks, Facebook and Apple and all those guys, right?
For anybody out there watching that isn't sure what market breadth is, that's the relation of stocks advancing to stocks declining.
Yeah. So how many stocks are moving?
How many stocks are moving and which direction they're moving. And market breadth has been narrowing, so even as the markets are going up, it's fewer and fewer stocks that are driving the market up.
Now we have $2 trillion companies in the S&P 500, and they swing a big stick when it comes to index levels, right? They account for the lion's share of the game. Most stocks.
Apple's higher than that. Apple's up closer to $4 trillion now, isn't it? It's ridiculous.
You know,
Apple's gone up over 1,000% since Tim Cook took over, and everybody said Apple was dead.
Right, because he's a supply chain manager. Because he's not going to be an innovator. Well, when
doesn't have to be.
Right, exactly. They have deep products that you need.
Yep.
Well, the iPhone basically.
It's a lifestyle company. It's a lifestyle support.
It's even more than that,
subscription
though.
company.
It's indispensable. It's like toothbrushes. It's like a Procter and Gamble in a way. You know,
huge companies out there, and so when the huge companies go up, they drag the whole average with it.
They do. So paying attention to the number of stocks moving, I mean, it tells you what investors are doing, and like really, we've seen. Investors want to own the big ones because there's that safety in numbers, safety in mediocrity, right? They're not going out on a limb. They're buying Apple for crying out loud.
Yep.
But they're not buying other stocks. They're not going for the Lemonades and the other ones and the Maxars.
They're going for those guarantees.
And
10
the
years
Maxars
down
of
the
the world.
line,
Right.
Apple's going to be here. Apple's probably going to be higher than where it is now.
So if they, if the switch flips and they decide to take a little out of those big ones, I mean, the market's going to get pounded. Like it's going to look really ugly.
Yeah. But it'll be interesting because the breadth actually could switch, and the smaller stocks could start advancing and just not bringing the averages up.
It looks a lot better this week, coming out of last week and this week. Semiconductors are out in front as a sector, and that's always what you want to see. Semiconductors and financials. When those two groups are leading, you have a very strong underlying strength for the market, right? Because you have investment money's flying around, so the banks are benefiting, and the semiconductors. I mean, they're in everything. What can you have without a semiconductor in it? So that means consumer demand is strong or improving. So those two are good ones to watch, and semiconductors are like out in front today. And I'm like, no, all right, maybe we have a bullish case. I think honestly though that we're filming this on what is today, the 30th?
The 30th.
Yeah,
yes.
30th. That you're seeing some end of month kind of window dressing.
You definitely see that. Today and tomorrow.
So I think coming into September we might get whacked. So I just took an hour and a half to say that I'm keeping Unity and Hannon Armstrong because I want those dividends. I want that kind of like protection, because I still think we have and plus they were my best performers. So it's definitely like you have to stick with your winners.
Got to.
And I still think Unit easily can have another 10-15% coming. The 13's kind of been the ceiling for a while. It's going to break above that at some point. Like it's simply going to. Hannon Armstrong is quality in the renewable space. Well, I like that there too. And then they're leading, so I'm going to stick with my semiconductor stock and keep Qualcomm. Okay. Because I still think it's a beast. That has not yet been unleashed.
Definitely, that was on my list of potential replacements if you dropped it.
Can't have it.
So now it's my turn, and man, this is tough because I just literally said you got to let your winners run. But at the same point in time, I've got 4 that are up. I really, really want to keep Chewy, and Chewy is my least winningest winner at a 4% gain last month.
Least winningest winner.
I do have a loser on there. Maxar did not do well for me. And Maxar's definitely coming out. I'm tempted, honestly, like I said, I'm tempted to keep all of them. Like Maxar is a great company, and it got sold off too much. It's up a good, I think, 10% since the sell-off. And I think it can come back more, but we're going to go ahead and take that one out. And then, this is tough.
Is it?
I like Innovative Industrial for the dividend. Love their dividend. It's a great dividend.
Yeah. You said you're never getting rid of it, so
I said it's going to stay in there for a really long time. All right, I don't use superlatives like that. Never, always.
You never do, and then you always break them.
So, man, this is tough. I think we're going to go ahead and we're going to keep Albemarle.
Okay.
Albemarle.
Okay.
Pardon me.
I'll allow it.
We're going to keep Albemarle. I think that You know, the Democrats really need a win. Biden wants a win, and he's going to keep pushing for the infrastructure package of $3.5 trillion, and people are going to keep betting on this. And just in general, Albemarle is going to keep making money. You know, they're going to keep pulling lithium out of the ground. That's going to keep going into batteries. That are going to keep going into cars. That are going to keep getting put on the road.
I mean, personally, I think the Democrats are kind of screwed on that infrastructure. I think this Afghanistan debacle is...
it's possible.
The Republicans can now fight it, because they have, like, you know, the perception of weakness. And, so
and there's also a debt ceiling coming, too. So even if the $3.5 trillion gets through, the Republicans could still actually fight it with by refusing to raise the debt ceiling. Yeah. But I think Albemarle can continue to give us like 10%. I wasn't expecting 30% out of it last month. I was thinking
you weren't
10,
really?
And I would have been happy with 10. But
if you had said 30, I would have called you insane.
Right.
I was saying you're nuts. There's no way that's happening.
So I would have been insightful.
Yeah.
So yeah, let's keep Albemarle. We're gonna keep IIPR. We're gonna keep Chewy, and I'm gonna let my biggest winner, Dix, fall off on the side there. This may end up biting me in the end here, but I think that Dix can continue to drift higher this month. I mean, after that 15% run up in a day,
your big wiener.
You know, it was my big winner.
I'm so sorry, but I had to.
Oh man, we might have to put a warning on this video now
probably.
on YouTube.
Yeah, sorry everyone.
Brit. But yeah, I'm gonna do that. We're gonna keep my first three: Albemarle, Innovative Industrial, and Chewy.
Yeah, it's good. I like it.
I like Chewy. I just wanted to throw this out there. Chewy's gonna be doing earnings this week,
and they're gonna be good. There's just no way they're not good.
They've been growing their revenue at like a 50% clip.
And they're and their 52-week highs are 130 or something.
I think 120.
120. Well, it's
120 or 130. It can get up there.
It's going back there soon.
It can get up there. So we're keeping Chewy, Innovative Industrial, and Albemarle.
It's just too solid.
So let's go back to replacement number one.
Replacement number one. I have some ideas, and you know what? I'm going with I'm taking Invite.
It's a good one.
Definitely it's too low. And you know, it's ready. And you know, the funny thing is, if we do get weakness, believe it or not, biotechs can really do well in a weak overall market, because they're so completely speculative in a lot of ways.
Yeah.
You know, those valuations. I mean, what? Valuing a pipeline. I mean, it's completely subjective. It could be anything. You could say, oh, it's $1 billion direct. Oh, it's a $3 billion direct. And so that's what happens when, markets get weak. You know, you have the opportunity to kind of push the biotechs around.
Right.
And so I'm going to stick with the kind of weakness theme coming up and take that from my.
I like it. I think that's a good one.
Okay. Was it on your list, though? Probably wasn't, was it?
Actually, it sort of was, but it wasn't. It wasn't on the official list that I typed out, but it was definitely one that I thought about. I really like it, and I think it pulled back a little bit after those merger rumors were swirling.
Yeah. And it's been basing, 25 to 30. So, yeah, it's probably in a good spot.
I think you've got a good one there. So now it's my turn. I already kept, so actually I put Chewy on my list in case I decided to drop Chewy.
Wait, what? You can't drop it and then rebuy it in the same
I totally can if you don't.
Oh no, that's right. We established that, didn't we? Yeah, you can. You can.
But I got to go with one. I got to go with a different one here.
It's like when the NFL, when you release a player and then you re-sign him. You know, that's
You can totally do
get
that.
out from under contracts. Yeah.
So
some kind of loophole.
I'm gonna go with Brit's got a chip company in there. I want a chip company in mine. I'm gonna go with NXPI. I actually took NXPI out last month and it was up like 16% over the month. So if I hadn't replaced NXPI, I would have had an even better average.
Okay.
Not that I needed it.
So you want another cookie? Is that it? You want?
I want all the cookies, Brit. I want
all the cookies.
I want all of them. So we're gonna go with NXPI for my first replacement. I really like NXPI. It's a great chip company. Like I said, it had a run like 16%. So let's see if that winner can keep winning.
All right.
Yeah.
Very good. So okay. I have another question about those rules.
About those rules.
So I'm going to oh wait. Oh no, I can't do this. All right. I'm gonna buck the tradition and go with last month's feature.
Okay. And so we're not going to release the name of that because this video is going to go out on YouTube, and we just gave that to our paying subscribers. Wouldn't be fair to give it away here on YouTube.
Correct.
So I know what that one is. Our subscribers know what that one is, and anybody out there on YouTube, if you would like to know what that one is, either wait for next month's video when we do our recap, or you can sign up for a subscription to the Wealth Advisory.
Yeah. go ahead and pay us the money. I mean, it's really cheap. It's not very much.
It
money.
really is, and it's totally worth it. I mean, you see these gains. You could have easily paid for a subscription to the Wealth Advisory with one of my stock picks last
month. It's like $100. I mean, what? $99. I mean, crying out loud.
Okay. I think that's a good one.
Yeah. And we got gains almost instantly.
We did
on that one. Which I mean, that happens for us. When we're not prematurely allocating our funds, we
and that one was a really interesting story too, because Britt picked up on this like a year and a half ago.
Oh yeah,
and
right.
He liked it. He told me about
at like
it.
9 or something, right?
Yeah, and I was doing the research on it, and while I was still doing the research, this thing ran up from like $10 to like $40, and I was
crazy.
like, oh man, we missed it. And then it went up another $20 to $60,
right.
and I was like, all right, that's definitely everything's priced in.
And you remember at 40, you were like,
came back down.
You were like, man, where should I buy that? And I was like, I think I retraced at 25. It was 25, yeah, but And it got back there.
We've been watching this stock for a really long
right.
time, for over a year, and we finally found a place where we feel confident, in getting into it, and we feel like there's still a lot of potential.
It got back to 25, but it had to go to like 60 first, which was, not exactly the sort of path I had planned out for it.
But yeah, this one's
back
definitely
there
got
seems,
big growth ahead.
Yeah.
I think you are very right. I think that's a very good pick.
Yeah.
And honestly, I think that pick could be worth the price of a subscriction to the Wealth Advisory.
Oh, I think it almost certainly will.
Obviously, I'm a little bit biased, but
did you read through that last earnings call?
Yeah.
I mean, it's amazing.
Really, really nice.
These guys have the bases covered. I mean, they're all over it. Every aspect, and there's a lot of tails to this one because it's like a really.
They really are.
It's such a big picture. It's almost like visionary to try to take on what they're taking on, and so there's definitely potential for disappointment because there's so much that can go wrong.
Yep. But it definitely is a long-term type thing.
Yeah,
gotta be a long-term play.
Ultimately, it can be a beast. I mean, another beast that has yet to be unleashed. So yeah, I'm taking that one.
I like that one.
All right.
I like that one.
Right.
I'm gonna go a little bit off the reservation here.
Great.
Right. We have an accommodative Fed. We have a Fed that is not going to let the markets crash.
Right.
If you look at some of our stocks, they have just gone on a tear since last week. Just a tear. And I want to add one of them that has been on a tear. It's up 20% in the last week, and I think that it can continue to run because of the accommodative Fed and because of all of the interest in digital currencies out there. And I want to put Greenbox in.
Oh, all right. Good call. I like it. I very much like that. Yeah. And about that accommodative Fed, so many people are. I heard an interview with John Paulson, the housing short guy who's been made $1 billion off that personally and has been in gold for the last, 10 years probably? Forever.
At least.
Forever. And he continues to pound the table about this fiat currency, the Fed's messing up, but it's like, it is a fiat currency, and everyone knows that.
Yeah.
The ultimate level of interest rates isn't really that big of a deal. I think not. I think this whole, oh my God, we've got to get it off the floor. Like and that was, as we came into the pandemic, a lot of the narrative before about the Fed's slow roll on raising rates and all that had been, what are you going to do if we have another crisis? Well, we had a pretty good sized crisis. And what did the Fed do? They brought the howitzers out. They blew money all over the place. And we're going to need a beep there probably. And, whoops. And what's happened? Sure, the Fed's balance sheet is bigger, doubled. But how is that really going to affect things?
Yeah, it hasn't really, it would be one thing if, these low rates kept people from buying U.S. debt.
Right.
If you had to raise rates, if you were like Greece or something like that.
The Fed buys U.S. debt. So, that's the weirdness of it all.
What's really interesting about it is that if you look at the breakdown, I think something like 50 to 60% of U.S. debt is held by private domestic investors.
Okay, makes sense.
A large portion, no, it's not that many. It's maybe like 40%.
Right.
And then another large portion by private international investors.
Right.
But it's really interesting that when you look at that, it's private families.
Right.
These are individuals bankrolling a government.
Sure.
It's amazing.
Well, and putting their money someplace where it can at least keep pace with inflation, which you have to do.
And where they know that they'll get that amount of money back at the end.
Right. It's a guarantee. And you have to do that.
Yeah.
You can say, oh, who wants to do that for 2% over the next 10 years? Well, if you're keeping pace with inflation, then your money's not losing value, and you at least are keeping, what you have.
Yep.
So yeah, I don't know, this whole accommodative Fed. I agree with you. It's obviously true, but I think it's where the Fed should be. I mean, think about how much is. I'm sorry to go on about this, but think about how much of our country is now tied to the stock market. I mean, everybody's retirement plan is in the market, right?
Oh, definitely.
Your 401ks and your IRAs, we are all tied to it.
Yeah.
And that is the future prosperity
definitely.
of Americans. And so, if you don't support the market, like what? What are you doing?
Like, there's really nothing that the Fed can do at this point. It's one of those things where, like, they've sort of they're I don't want to say they painted themselves into a corner, but I mean, we started a long time ago with the Fed making sure that the market stayed up. You know, like
Greenspan basically was the guy with the Bloomberg terminal in his
job,
office.
and now they can't really they can't step away from that.
Well, and they shouldn't.
No.
And they shouldn't. I mean, if you're talking about stability of the financial markets, you know, of the banking system, I mean, it's like one and the same now. If that's the Fed's charter, then this is where they have to be, and this is what they have to do. And we should be kind of grateful rather than like vilifying them and saying how much they're screwing up. Because, I mean, honestly, they have our backs in a way. Like, they're looking out for our future prosperity, our retirements, our household wealth, and
they definitely
thank you very much. Like, that's good.
And
That's
as a person
like
who wouldn't
thing.
want to do that job, you'll never hear me saying that they're doing a horrible job, because I don't know that I could really do anything better.
How easy would it be? You're like, oh, well, let's just throw some money out. I mean, we're going to buy some more of that. Maybe we should buy some stocks.
Exactly. And some bonds.
Yeah.
There's some out there.
Which they've done. Maybe they'll start buying like used cars and stuff. I'm like, just kidding.
Prices are already too high on those, Britt.
It's true. It's true.
Into that market.
Okay, so
so that's it.
Yeah, I think that wraps it up. We've got our 5. I'm taking Hannon Armstrong, Unity, Qualcomm, Invitae, and
our newest feature recommendation.
Oh, right, that's right. Because I didn't say the name because I couldn't remember the name because I can't say the name.
Unnamed.
Right.
Except on my spreadsheet here.
Exactly.
And I am going with Albemarle Innovative Industrial Properties Chewy, and then I'm adding NXPI, NXP Semiconductors, and Greenbox.
Cool. All right, there you go. Oh, and can you guys get married somewhere like tropical? I think that would be really fun. I
kind of like the idea. I mean, I feel like there's really no better way to say, you know, like, screw
don't
you
come to
your
my wedding
family and
then go out of the
friends than
country.
having it, you know, in another country. But to be honest, no, we're probably going to do something really small. You know, we're simple people.
Well, I'm crashing it if you don't invite me. So
you're totally invited, pal. I mean, the biggest cheerleader has to be invited.
And if I crash it, I'm going to have like
but you can't wear your
paint on.
You can't wear your cheerleader's costume to the wedding.
Well, no, that's fine.
I forbid it.
I'll wear that for the bachelorette party.
There you go.
I'll show up and dance for him.
I'm sure they'll love it.
Oh, it's horrifying. Well, it'll end early. The party will be done by like 9.
If I'm worried, I'll send you.
I gotta go. I gotta do my hair. All right. Well, anyway, thanks for tuning in. That is our top 10 for September. Jason, well done. Congratulations again on getting hitched and
thank you.
Or agreeing to get hitched and your gains for August. It was
Congratulations
really
on having kids that are smarter than you, smart enough to get out of the way of a hurricane.
Right.
And good luck to you next month.
All right, everybody, take care, and yeah, we'll talk to you in October.
And for everybody watching on YouTube, don't forget to subscribe to the channel, like the video, leave us a comment if you really like the video.
Yeah, we'll start answering those comments.
And click that bell to make sure you get notified of any new content we post.
Great, thanks again.